Hello, 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 everyone. Happy Friday the 13th. How is everyone doing this happy Friday the 13th in May? In May, it's already May, mid-May. So, let's see. Let's see. I know we got some people. Hey, Waka Waka. Asian at it again, pumping it up. I don't like that turn. It just rallies again in Asia. We're gonna have to see, and then it followed through with Europe. Pretty quiet session though. Did trigger the double bottoms. They're not potential. They are triggered. I was watching on that 1 hour. Uh, we'll probably talk about that with Elon. Gotta love early morning manipulation, Mike. Again, with everything you gotta, the whole Tesla thing. I see you're asking about Tesla too. We'll get to Tesla. We'll get to Twitter. We'll get to that on in a matter of a few minutes. But let's start with our overall broad market. Yeah, Elon just wears me out. It's absolutely ridiculous that nothing. You'll get me started. By the way, before we get going, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term viewers, please leave some comments and like or dislike the videos to help us get more circulation. So, with that, again, happy Friday. By the way, we had export prices coming in a little better, import prices coming in a little better. That's interesting, but year over year still running very hot for import, and export prices year over year still running very hot, but a slight month over month improvement. Remember, consumer sentiment coming out in about 55 minutes, and that can be potentially market moving, especially the inflation expectations. Then the Fed's cash and carry is going to be speaking at 10 Central, 11 Eastern. And for oil traders, you got the rig counts, which is important right now. FOMC, actually 75 basis point back up to almost 13% after dropping yesterday, but nothing substantial yet. And remember, still in negative gamma territory, so upside and downside moves can be exaggerated, especially on the opens. Nothing much in earnings, just for the point of completeness, just nothing much that I was watching or market moving today. So let's get into the broad market before I get to some more comments, besides some saying good morning to Options 22. Good morning, Sashi. Good morning, George. Hopefully we can sleep on some gains and not have to cash out by lunch. Yeah, and I don't. Holding over the weekend still in these conditions is risky unless you're in a longer term position where you have a comfort cushion and you have some good stops in place. So if you're just trading short, even with the double, if the double didn't even complete today, I'd be looking to exit and then possibly re-enter on Sunday night, Monday morning. Here's what we're talking about. And all right, so you got that double trigger back up to my first key level is 39.87, but that's not part of the double. The first target on the double is this 4,000. On any pullbacks, it's also closing above the flattening out rotation zone, though. So what am I watching on any pullbacks? There's two key things. I'm watching the bottom of the 1 hour rotation zone and this little potential support ridge right around here, which it tested earlier. And then if we break below that, here's where I'll use the harmonics back on this little up move. So if it pushes higher, remember to update this. But my minor level on a pullback, 39.21, where I'll be watching, this would be the key area I'd be watching if it did drop in the open for it to hold. And we start getting a close below 39.05. Starts favoring a retest of the lows. Remember, this is just a very short-term pattern, not a long-term bottoming pattern yet. So, or even a midterm bottoming, because it was based off a 1 hour chart. And also on you see here, even to push to the second level is just a 37.5% retracement of this down move and the daily rotation zone. So could we easily push up, rotate over, and then make a larger bottoming pattern going into next week, which a lot of the cycles, the dailies are starting to turn up, but the weeklies are still, we're waiting for them to really get going. So we could easily still see another rollover push even if we connect with the second and third, as the first and second targets, and as Bob says in bear markets, he likes to really focus on that second target. So could we pull back again after hitting those and then make a potentially more medium-term bottom? Completely possible. That's why I'm watching these levels going into the open and midday today. Nasdaq, little weaker. I'm watching around the first areas about this 1276 to about 1296 area to see if that holds. If that doesn't, the other thing I didn't point out in the S&P, we do have some clear path moves. So you could see some pretty rapid, if you get some momentum off the open, you could see some pretty rapid moves back down. The first area, interesting enough, we have this little breakout zone going into this clear path right here, which is the 50%. 11,940. Let's see here. I'm trying to get the level. 11,948, 11,949. And then the key line, the sand for me is 11,884. Anywhere in here, I'd watch for another push up, but a close below 11,884, then I'd be retargeting the lows. The targets the upside, which is confirmed, 12,340, 12,443 are the two major ones I'm utilizing. Let's see. Good morning, John. Welcome, welcome, welcome. Good morning, the sushi and me. I like that, the sushi and me. I wonder if we will continue to go up, SPY to 420, or just a relief rally, then pop. Right now, with the short-term patterns, again, short-term patterns, can it continue beyond there? Yes, but this would just be for short-term moves until we get a longer-term pattern in place. So that's what I'm stressing. Again, you got to put this into context with when you have 1 hour patterns, they're very short term. When you get daily patterns or weekly patterns, they're much longer. So you see here with the daily on the Nasdaq, you can't even get to the second target without getting into the daily rotation zone. And you see this first target either, and that's pretty significant with this key gap open right there and the closing price. So it's got some price action to chew through. That's why we have to remember to analyze both sides of the markets. You can't get caught one way or another overly bearish. Now, you know, longer term, when I have long-term sell signals in place, longer term I am bearish. But as I've reviewed multiple times, we can still get massive rallies in a long-term bear market. Don't get caught with yourself getting extreme sentiment on one side or the other. Make sure you analyze and follow your price actions and your trade setups. If you don't look at both sides, you can get blindsided by moves. Thank you to, I don't know if that's how you say it. Is it to? Thank you for that nice comment. I really appreciate you being here. Why is the Dow so weak? The Dow was actually holding up better. Now it is in weak mode. It's with a lot of you're going to have because of the weighting with the S&P and the Nasdaq with the cap weighting, and the fact that you still have things like your Apples, your Facebooks, your not even Facebook, your Microsoft, which is in terms of cap rating, when they really move, you're going to get the exaggerated moves both up and down, more so in the S&P, and the Dow's only 30 stocks. And right now, there's just not a lot of those stocks in great positions. Also, remember your Dow, I didn't even have a bottoming pattern on here, even on a continued rally to about 33,231 and even 32,577. We broke down from this major support base. So the Dow is not something I am focused on longer term on the bullish plays at this moment. Jim just tweeted, world ain't over, get ready for a huge dump. Thank you, Jim, for ruining the short-term bottoming patterns. I think you're referring to Jim Cramer. Russell, again, Russell, you're going to get a little bounce, but this is the last one I'm in. The last two I'm interested in right now. I'm trading on the bullish is the Dow and the Russell. Russell sitting at this key level, 1757. Minor level back up will be 1788. You know how to do the harmonics. The DAX, longer term, DAX still very bearish on because of the weekly position, but we're getting a nice little rally. We have this little channel pattern right here bouncing off the lower bound of it. So my next level to the upside is miners about 14,000 really. About 14K, and then we get above there, it's about 14,120. On a rollover play, I'd be targeting about 13,684. Crude, still, we got that close yesterday. I talked about it. Hold on that 4 hour, just above the 62.5, but not on the daily. But now we're still focusing on this 87.5, especially with the breakout play. So 109.72 to about 111.36 is my play in crude, and then 113.68. Can't get really super bullish until we get one above 116.50. Gold still getting hammered. Not standing in front of gold at all. My next level is 1786. Still watching for a bottom pattern, but it looks like it's going to be sometime next week. And silver still getting spanked. Now it's extreme lightening up and waiting for some lower prices because we have overhead resistance. I'm looking to unwind some stuff, and then on a further pullbacks, then it would be to re-add to keep lowering the cost basis trading around a core position because you broke this key support into a clear path move. Also got asked about this. Silver is triggering we'll take a look at it on the close, but it's probably triggering the weekly sell signal. Notes, pulling back a bit. Still favoring the higher price action, but what would shift that? What would shift that is, again, we got to keep the key area. My key area would be 118.09.5. All right, if we did pull back that far, but I'm on a pullback, my area to watch for major support would be 118.21. So just wanted to point those levels out. Dollar index pausing at this harmonic. Key support level coming at about 104 now. And if we do push higher again, 105.58. Checking in with Tesla and the Elon saga. Tesla up pre-market. I am going to do the gap harmonics. Keep in mind, this is just, it's because of the Twitter deal with Elon. It's in jeopardy. It's still committed. If you want my thoughts on the Twitter stuff, first of all, that shouldn't have been tweeted out. We have no enforcement, though, anymore. So, again, the other stuff, he's trying to blame the bot stuff. And don't get me started on the bot accounts for pumping Tesla, which is so ironic. However, he also waived, remember with the deal, he essentially waived most of the due diligence besides financial stuff. And to blame the stuff on bots could get very interesting if there's a shareholder lawsuit longer term. But that would be tied up in courts for years. Twitter, then we'll get back to... I know pre-market was trading down a lot lower. You can see here it was down below the target on the double and now bouncing back, trying to hold that little support. That's just going to be back and forth. I know people say he's trying to get a better price on the deal, but this is really, if we really had enforcement, this is very dangerous territory and not the appropriate way to try to deal with lowering the acquisition costs on Twitter, especially trying to tweet out both sides, So that's my thoughts on there. Now, you got that big Tesla pop off of that, which, he did sell that $8.4 billion. So even if he has to pay that billion breakup fee, he could still walk away with $7.4 billion in Tesla sales and just blame it on that he had to sell Tesla due to Twitter. Now, longer term, it's into the daily rotation zone. This, I am still, again, you know what I am. I'm bearish on this, especially going into Q2. We'll watch for, even on a continued rally, we'll watch for rollover plays. The 62.5 level is right now on this last down move is 850. So could you even see a longer term run up to there easily? The 50% level is 818. What am I watching for on the open? I am watching where it does open. Then I'm doing my gap harmonics. The gap harmonics. So yesterday's close 728.10. So it's roughly, I mean, we're roughly right around here. So the key line, the sand will be, is roughly around 746.50 area. That's what I'm going to be watching. Let's see. So that's where we sit. What on earth is Elon thinking? Such a big pumper and dumper guy needs to go to prison. I mean, yeah, fed up with constant manipulation. I completely agree with some of these comments. It's why I'm very frustrated with the market conditions. Not from the fact that it's a bull or a bear market or anything else, because, yeah, you get bear markets and there's nobody to blame on bear markets besides they happen. And we're not going to do that. And besides, the Fed was completely behind the curve and let everything run up to ridiculous levels. All right. However, the stuff I get aggravated with is the constant. This makes the trading environment very, very difficult, and people can get whipsawed in moves, and that's where the SEC has to step in. So longer term, Ken, any breakout plays. Now remember, if the Nasdaq rotates back up on the open, you could see some strength in Tesla and really just continue to rally higher. It's into the 4-hour rotation zone. So, I mean, I'm really focused on a rally higher at this 50% retracement level, 817 area with the declining 4-hour rotation zone. So that would just be a short-term long scalp play. Where do we sit now? Hold on, I'm just trying to get through everything. Let me double check with the Qs. I know options 22 is here after hitting that major 50% harmonic, reversing yesterday back to the prior harmonic. Looks like pre-market is up with the Qs as expected. We've had that overnight, but against the 4-hour rotation zone. So they're very cautious in the Qs, and we already see the Nasdaq rolling back a bit. So I'd be watching potentially for any plays now on the Qs. Pullback plays on the Qs because it looks like it's going to open pre-market, trigger with the double, and this is the move that really started it, and your second target is in it. So your target's 301.10, 303.77 on your pullback plays. Your pullback plays, 289.06 is your key line in the sand. You don't want to see a drop below that on a closing basis, at least I'd say at least 15-minute. 290 is your pullback level should it start filling the gap. Now remember, you could do your gap plays, but just off of this run up, and we're going to have to then put it back up here. Roughly, though, I'm going at the pre-market, which is roughly at yesterday's high, so we can roughly estimate 290. 40 and then 280, 289. Those are the levels I am at with that. Where do we sit? He just killed it. Well, we're back to Kramer and the Nasdaq dumps. Well, Kramer's the ultimate inverse. This isn't a dump though. This is just a pullback. Remember, don't get overly. I want to really stress on whatever you're following, whether you're in the markets. I know there's a lot of bearish people in here, but don't get overly nuts with trying to get one side or the other. Really look to the price action, because I can't even get intraday bearish, even for watching for a bigger pullback until we start dropping below about this 12,076. Why? You see resistance here, breaking through it. All right, into Europe, getting that pullback into the U.S. So yes, we start getting momentum on the open below here. I then target these levels lower, and it doesn't invalidate the double yet. So that's again, this is a short-term pullback going into the open, which is in 5 minutes. I really want to One thing I'm starting to see is get people starting to get a long-term confirmation bias, which we all can get, and that's why I still want everybody to learn to look at both sides of anything you're trading and then figure out what would tip it on your different time frames. What would tip it on a 1 hour time frame bearish? What makes it 1 hour bullish? Like, all right, we had a double trigger, which we have probabilities with that. We have probabilities. So that's what I want to stress. Otherwise, you can get caught blindsided, especially in bear markets with only looking at things through one colored lens. All right. So you are welcome options. Not only that, he gets a $1 billion tax. Yeah, we're back to Elon right off you. So he could now, if he tries to walk away, there will be lawsuits flying. There will be, but it will take years to resolve in the court system. The SEC, which is proven to be impotent, is not going to do anything. If they do anything, they'll like slap a $100,000 fine on him, which is fuzz in your pocket. Yes, good day. Pull back to 50% and move, then boom, back up. You know, this is where we just analyze the stuff. Maybe action in the last hour. There'll be a lot of people flattening out today. A lot of people will be flattening out still with this. So keep that in mind. So 12,076 invalidates the double. No, the double's not invalidated. The double is not invalidated unless you get a close on a 1 hour close below 11,855 or a trade below 11,800. What I'm watching for before that, though, is this key area to hold. So that was the only thing that invalidates the double. And that's what tested out statistically. Good morning, Lauren. How low does it need to go when the double bottom is negated? Yes, I just answered that. So that's how we do it. Okay, with that, I'm going to get ready for the opening price action. If anything substantial happens today, I will be on at lunch. If it's just a normal trading day, you don't expect me there. I will be, and it's going to be a quicker session this afternoon. By the way, it is my birthday weekend this weekend. My birthday is Sunday, but I will still be doing the show this afternoon, and I'll still be doing the sector overview, and I will still be doing the Sunday afternoon show because this is what we're here for, to help everybody trade this price action. All right? Especially in difficult bear markets. Friday the 13th, scary. Well, thank you, Waka Waka. Thank you, Josh. Thank you, Options. I really appreciate it. Again, my birthday is Sunday, May 15th. So let's trade well. If you don't have anything, thank you, Wavy. Sit on your hands, manage your stops, and learn. If you don't have anything, at least learn to watch the price action and analyze both sides. That's the message for this weekend. We're analyzing both sides to not get caught in a stock or in the markets overly bullish, overly bearish. And we're going to keep the time frames in mind. So I want you to focus on that throughout today's. If you don't have anything to do, still focus on price action, still learn to analyze it, even on shorter term charts, and then don't get caught up. Thank you, Wavy. What do you think of options expiry today? It's just the weeklies, not much. Next week's going to be the big one. Next week is going to be the interesting options expired, and I've already talked about that with the 4,000 level in the cash. All right, going to wrap it up for now. I will talk to everyone later. Have a great trading day. Bye for now.